Turning to business news now with Jonathan Mitchell, and reporting season is underway. Who's out of the starting gate today, Jonathan?
We had the rural services firm PGG Wrightson out today with a net profit in the year to the end of June around $40 million. That's up about a quarter on last year's result, helped by gains on asset sales and a lower tax bill. It's quite a strong result for a rural firm. Obviously, the agriculture sector is doing it quite tough at the moment, led by the dairy sector weakness, and that did have some effect on some of their divisions, led by livestock. But there were some green shoots coming through for the firm. Their sea and grain divisions performed quite well, along with retail. Real estate actually performed better too, higher sales of farm blocks.
Did PGG give any guidance, Jonathan?
They're going to provide a bit more steer about their 2017 earnings at the annual meeting in October.
Right.
They have said, though, that this current financial year that they're in now will be a tougher trading year. At the moment, though, they're happy with their portfolio. They're wanting to get the most returns out of all their assets. They have pointed out, though, that they are looking at bringing in a new strategy, and they're going to announce that in a couple of months.
Jonathan, I see elsewhere there's been a warning from clothing retailer Hallenstein Glasson. Is that about a fall in profit, is it?
Yeah, they're forecasting a lower net profit, down 22% to about $13.5 million in the year to August. They're blaming a few things, actually: a lower currency, the warmer weather this year, especially leading into winter. But more to the point, they're saying ineffective management is to blame. They've said they've fixed this by bringing in Di Humphries. She used to be with the firm. She's now leading the Glassons chain. She was previously with Pumpkin Patch. And since about June, Hallenstein Glassons has said they've noticed a pickup in their performance, but obviously not enough to improve the net profit.
Right. Boy, oh boy, it's tough times for them. Sky City, big day for them tomorrow, and I suspect their numbers are going to be much bigger.
That's right. Markets pricing in somewhere around $160 million for the year to the end of June. That would be up about $30 million on last year's result. It's been quite an interesting time for Sky City, I guess. More recently, the resignation of the chief executive, Nigel Morrison. It will be interesting to see. We'll be watching out for how the Auckland flagship casino performs when those results come out tomorrow.
Thanks, Jonathan. What happened on the markets today?
We hit another record, up 15 points, 7363. The dollar fairly flat, 71.28 US cents, just over 93 Australian.
Jonathan Mitchell joining us live from the Wellington newsroom. Thanks, Jonathan.